Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, December 17th, 2024. I am Frank Ochoa, aka PivotBoss. Happy Tuesday, everyone. Here's a look at the daily time frame of the ES. Right now, inside day, a little bit of a pullback in overnight and pre-market trading. This market right now trading 27.75 points of range and kind of trading back through the previous session's range after the rollover gap up. Right now, core retail sales and retail sales due out in about 10 seconds here as this market looks to react to that important economic data. Right now, uptrending market still in full effect. Again, a 10-day narrow range here breakout with an upward bias. So even if we see a flash lower here, this could be a failed new low with a creep back to the upside. Again, this market looking to push higher overall and work its way for a melt up phase towards 6,200 and perhaps even up as high as 6,300 by the end of the year, based on the 10-day compression here and the potential energy that comes out of that compression. Right now, core retail sales coming in at 0.2% versus a 0.4% estimate, upward revised from last time around from 0.1 to 0.2%. We also have retail sales coming in at 0.7% versus 0.6% estimate, also upward revised to 0.5 from 0.4 last time around. So right now, seeing a little bit of a reaction on that here at the moment. Again, based on the uptrending nature of this market, even if we were to test the previous session's low price, that could provide a failed new low opportunity for a push back to the upside and work our way higher, quietly higher throughout the course of the week. We still have GDP later on this week on a Thursday, but the big item here this week will be the Fed tomorrow. So Fed Wednesday is tomorrow, and this market could be mostly two-day narrow range ahead of the Fed, with the potential to see increased volatility Wednesday afternoon and into Thursday and Friday. So for the most part, sideways with an upward bias here could be in play the rest of the day as this market awaits the Fed Wednesday. Looking at the NQ here, currently hanging on to the gains of the previous session. This one had a tremendous amount of price discovery to the upside, big elongation of the price range here, and held those gains into the close today. Super narrow range right now, just 40% of average range, 102 points of range right now, still melting up in a big way. Today, seeing a little bit of compression here as this market again absorbs retail sales and core retail sales and works toward the Fed tomorrow. Fed interest rate decision tomorrow, the Fed statement tomorrow, the press conference that follows, and of course we get ourselves another FOMC key level to work off of as well. This market continues to melt up with the potential to reach 23,000 and perhaps even beyond by the end of the month. There's plenty of months still left to trade, a whole week today or this week, and then we have some partial weeks coming up as we head into the end of the year. But that usually leads to a low volatility, low volume, upward movement and a melt up phase that occurs during that period of time. Right now, fairly narrow. Could see a holding pattern here with an upward bias as we head into Wednesday's Fed. Looking at crude oil, this one's down right now about 1%, 1.14% right now, 69.49, and seeing some weakness here. We knew that we'd see some strength last week, and after reaching 71.72, we knew that we could begin to see a little bit of a counter rotation here. This could be the last down move of the year. Whatever move we see here materialize, that could be a buying opportunity for what leads us into the end of the year for a late year rally and a first of the year rally into the first week of March. So right now seeing a little bit of weakness, giving up the 70 level at the moment, and we could see a bit more downtrending price action. Oil stocks and oil related markets getting crushed overall throughout the month. But right now, crude oil giving back some of the gains from last week and giving up the 70 level, which could open up a return back toward the 68.40, 68.30 zone, which is the previous quarter's close price. Looking at gold futures right now, this one down 0.6%. Mentioned yesterday, any pullback toward 2700 could be a selling opportunity for a rotation back toward the 2630s. 2630 is the midpoint of the key range here. That's 3240 to be exact. Mentioned yesterday that the 2680 level has become resistance yet again. It was resistance before, and for price to turn down off that level would suggest a rotation back toward the bottom of the recent narrow trading range, and that also coincides with the midpoint of the key range. So 2632.40 is that level, still showing some weakness here out of gold, as this one has seen a tremendous rejection over the course of the last week of trading, and that could materialize with a bit more weakness here ahead. Looking at the YM right now trading 242 points of range. This one had a rollover gap to the upside, but significantly lagged behind tech yesterday. Obviously the NQ way up, even the ES was up, RTY was up, but the YM was not able to really advance beyond the 44,500 level. Instead found an early high and worked its way down the rest of the day. Another inverted checkmark trend day, which is in line with all the other previous 7 days that we've seen. The only difference here was this one had a rollover gap up, but still had the same style pattern that we've seen. So that's 8 days running of a same pattern. If I change this back here to 1 day, you'll see yesterday's range was in line with the range we've seen over the previous week and a half. All of these days are very similar. Yesterday, 278 points. The day before, 280 points. We had 331 here, 260 here, 290. So very uniform price action here as this market continues to see a downtrending price structure here overall. Today, seeing an inverted checkmark day down as well. Currently trading 242 points of range at 78% of ADR, with the potential to work its way down into Friday's range even more. Overall, this market continues to see a medium to longer term uptrend here, but we're still in the short term downtrend rotation. Do we need a test at 43,500 before we start to rotate higher into the end of the year? Do we get an end of the year rally out of this one, given its weakness throughout the first half of the month? So right now, still overall bearish here for blue chips, but if we get a test into the previous month's midpoint, that might finally stop the bleeding here for a shot at end of year strength. Looking at Bitcoin, this one's up right now 1.4%, trading 108,000 right now. 108,000. The previous session set an all-time high at 108,475. Right now, this market here continues to trend up. We have that compression here and the recent 2-day breakout that is played out, and we could be looking at a continuation to the 113,745 level. Again, that's the 200% extension from that key range that we talked about before, the key range that developed in July and August. That key range was the key range we used for the 92 285 target, but we've blown through that target and now looking at the 200% target at 113,745, which could be an easy target ahead over the course of the next week to 2 weeks, as this market remains within a very bullish trending structure. The bullish Pima trigger zone continues to be stacked and sloped to the upside, and any counter trend rotation into that zone could be a buying opportunity for a continuation up until we see a strong high develop. So very bullish out of Bitcoin. Ether futures here down a little bit today, but still holding above the 4,000 level. The last time this thing traded 4,000, the last couple of times, it was clear that this thing was showing signs of rejection in both of those instances. This time around, not as clear. Instead, it looks a bit more bullish up here it looks like it's going to work its way through this level and make a move to the next market structure level above, which is going to be 4,600. 4,600 would be our next market structure level above, but as of right now, still hanging on around the 4,000 level, still a bullish market structure overall. As we mentioned before, in order to kind of break this market structure, we'd need to get below 3,400, and that would really significantly injure this bullish market structure. Until then, pullbacks are to be defended as this thing continues to work higher. The previous couple of times we've seen movement through 4,000, we've just kind of pulled back below it a little bit here, but overall, still a bullish trend, still working higher. If this thing can find acceptance through 4,100 here, we could see a transition that takes us to 4,600 above, which is going to be our next highest market structure level. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.